on, so we could definitely go ahead and get busy. But the guests that I got coming on, man, I just went ahead and started building a relationship with them. I went ahead and started building a relationship. I went ahead and said, you know what? I want to learn from these individuals. I want to learn what it is that they're doing. I want to learn how they're actually doing it. So I went ahead and I shot my shot, right? I shot my shot and I said, you know what? I got to go ahead and reach out to them because they got the information that I don't know. And I'm humble enough to say that if somebody's closing a $77 million deal, yeah, I want to go ahead and just learn from you. I want to be quiet. I want to shut up. I don't even want to talk too much. I just really want to just know, and I want to get my questions answered, right? So I might have to restart it until I see them on here. Okay, but they are coming. I've sent this live to 5 people. They should be coming on in a second. Send this live to 5 people. What's going on? What's going on, ladies? I'm amazing. I am amazing. I'm even better because y'all here now. I'm even better because you guys are here now. What's going on, though? How are you guys?
We're so excited. Thank you for having us, and we're going live together. Yes, so it's going to be amazing.
Yo, I've been hearing about you guys for some time now. And I said, you know what, I have to shoot my shot. I gotta reach out. I gotta go ahead and connect with you guys. I was like, because the numbers that you guys are doing, I feel like a lot of people, they dream about those numbers. They manifest those numbers, and some of those numbers might scare some people. And I feel like you guys are here to be able to break down that barrier. And I love that you guys are women that are dominating in this space, because typically it's a male dominant space within the real estate space, and some people don't even know where to start or anything of the nature. So real quick, guys, go ahead and send this out to 5 people that you feel like can benefit from this. We got the Kitti sisters on here, and I mean, they're absolutely beasts, and I'm grateful to go ahead and be on the call with you guys. But real quick, just let everybody know, at least to my audience, let everybody know what you guys do real quick, and then we'll jump right into it.
Well, she's Palmy, and I'm Nancy, and again, we're together. We make the Kitti sister. We help high-level entrepreneurs secure their financial future while paying the least amount of taxes through multifamily apartment investing.
Nice. Let's get it. So, let's really get into it, right? And let's not waste no time, because I got class with you guys too. So if you guys don't know, at any time during this live, you guys can go to the link in my bio, register for the class with them. I'm actually in the class. I'm a VIP. I'm not a general admission. I'm a VIP guy. I got the VIP so I can go ahead and get proximity and be able to ask some questions as well, and also get access to the recording. So at any time during the live, go ahead and hit the link in my bio, register for it, and let's get going. So exposure is everything, guys. You guys might hear one sentence, one word, something that may go ahead and impact you, or may say, you know what, I need to go ahead and get into this space. I need to go ahead and start learning from them. So you can go ahead and do that. So congratulations to yourself, everybody who even showed up, and there should be some more people tuning in. So I would say definitely take notes, guys, and let's get busy. So how did you guys learn about the multifamilies? Like, what was your first exposure to multifamily?
Let me shout out to our friend Marvin. He's in the house. Hi, Marvin. So how we got started was we were in fashion manufacturing, completely, totally different business. Our business was doing really, really well, but we were actively doing the business. We were the assets. One day, our client shut down all their retail stores. It's a really big brand that if I say it, everyone would know. And then overnight, 95% of our income just collapsed. And so we had to act fast. We were like, how do we find another line of business that we can't be outsourced? A lot of manufacturing business left the US, went all over the world, and subsequently they'll move. It's like move from China to India to all these other countries, and it's like you get tired and you're like, I don't want to be chasing the lowest dollar amount continuously, like lowest denominator. Like they pay this price, and the next time they order, they pay less and less and less. And I think like a lot of people, they don't think that they have choices. So like for us, we were stuck in that kind of mentality for a little while where we think, okay, I guess we just need either find our new client, do the same thing and repeat the cycle, or we actually have choices and realize that, hey, we should do something that cannot be outsourced and that there's like, you know, people always going to need. And that's when we turn into real estate investing. Yep.
Okay, so okay, cool. So that's like the background on
Yeah.
how you guys got into it. But who
Okay.
who's the one who kind of like
Yeah.
introduced y'all to the specific thing of multi-unit? Like, when was the first time you said,
Yeah.
I
Yeah.
looked at it and I said, hey, I think I want to
So
do
we
that.
started out flipping houses. And when we were flipping houses, we started hearing inkling of like, oh, people are doing passive investing in multifamily. And they were explaining at the time, it's a natural progression. People make money in flipping houses. Sorry, doggy. I'll explain. Nan's
You're
gonna take
fine.
care of the dog her real quick. Basically, people were
No,
like,
you're fine.
hey, when you flip houses, if you hold a property less than 12 months, you pay short-term capital gain, which is the highest level of tax. But if you passively invest in multifamily, that can help offset it because you're a full-time real estate professional, you're flipping houses, right? So that was our first time we heard it. So people were like, you need to get into investing passively. We went to a lot of real estate events locally in the Los Angeles area, and people were selling us on passive investing. And we're like, well, that sounds really interesting. So that's how we got started in multifamily, by being passive investors, because we're like, okay, like we don't want to be the only assets. We want to own assets, and real estate in multifamily, this seems to make sense because we were landlords and we didn't like dealing with tenant toilets, trash, and termites. So we're like, okay, this passive investing seems like what we want to do. And then, you know what, as a matter of fact, we also have tax issues. So when we started not investing, tax issue like tax, like, yeah, but we pay a lot of taxes. We have to pay taxes. So we when we invested in our first deal and we got back, like, you know, the tax benefit, I think it was like and 89% of the investment dollar was taxed. 83%, right? So we're like, oh my God, this is so cool. Like, we put in like $1 and we get back 83%, let's say, right? In tax break. So what that means for your audience who's newer to your apartments, imagine you have a tax bill to the IRS of $83,000, for example, right? You already know you're gonna have to give this money to the IRS by April, by March, whenever that is. Now, instead of giving them 83,000 that will go into the ether and never come back to you, you put that same dollar amount into a multifamily apartment, and now it offsets that tax liability. It reduces it to, like, if it's 83 and you get 83 in tax break, it drops to zero. So it's your taxable dollar becomes zero at that point. That was where we're like, whoa, this is amazing. A lot of people don't even understand this. Most high level people don't even understand it. And so we were so addicted to it. And then until we hit the point where, like, okay, well, this is good, but we need more money. How do we do it? So we're like, why don't we transition to do the active side of it so that we can get the benefit of both worlds? Because what we found out is that multifamily apartment creates like two income stream, right? One is, as if you're an active, you get an active investor income, and at the same time you're building that passive income. Yeah, so it's a unique business. It's unlike any other business. Normally businesses, especially in a startup phase, you make active income as you're working in it. But and that takes hustle and grind, and we're fine with that for a time. But you also need to start building wealth. So there's a difference between income and wealth. Income is what you have to make effort towards. Trade your time for. So sorry. I think she's hungry. Well, we'll give her more food after. We already fed her, but I think she's hungry. So active income is you work for it. Wealth is something that keeps growing over time. Multifamily, if you do it correctly, will give you both at the same time. You're not doing extra work. When you're an active person, like what you're learning to do, John, you're gonna make acquisition fee. You're gonna make all these different fees along the way. That's like your income. But they also give you a built-in equity that's going to be a big nest egg that when you sell the deal, you're going to have a huge pot that will become part of your wealth that will grow further. Yeah.
Okay. So initially, if you plan on making a lot of money, you want to put your money in that space because you want to pay less. You want to pay aggressive, less taxes, but you also want to build wealth
simultaneously.
Got you. So see, this is the conversations that's not being taught in certain things. There's the person that's the real estate agent. There's the person that maybe is doing the title company. There's the people who play the parts in this space, but I don't think nobody's had like, at least for myself, I've never had this conversation where I knew, like, okay, cool, now I know what to do with $200,000, right away without even thinking. I know exactly what to do, because I can either, I mean, let's also talk about, okay, if I do put my money in there, there's a tax break, but even, let's just say, hypothetically speaking, even if the deal probably didn't go my way, I'm still getting the tax break,
100%
correct?
immediately.
So I'd rather put my money into the multi-units rather than giving it to Uncle Sam anyway.
And here's the thing, if you invest in the right deals, multifamily in the long run has never dropped in value. Of course, like everything else, there's, like ebbs and flow, but you go look, since Great Depression, we have actually, you have access to it actually. We did a presentation that talks about every single time there's a recession, the drop in multifamily value and rent is minimal compared to the stock market, and the rebound is much faster. So like, for instance, in 2008, when we had the Great Recession, right? So it dropped a bit. It dropped like 5%, the rent. But then like in a couple years, it went, the high was higher than the previous high, and it continues to grow. So that's why yes, there's chances of anyone losing out on any investment. And we say, like, is it possible? Yes. But is it probable? It's different, right? But okay, number one thing is, like, you get that tax benefit right away. The second thing is, if you invest in the right deal and you know how to do the proper due diligence to investigate who you should invest with, how to evaluate if a deal is good, the chances of losing all your money becomes really, really low. And we're not going to say it's not possible, because there's always risk, and I think it's prudent for everyone. But you're right, you caught that. Like, for people who make a lot of money, the biggest thing that will make them wealthier is to save money on taxes. You can make that money. You can literally make the same dollar amount. You're paying 40% to the IRS. If you can save that 40% and it's growing, it doubles, right? So it's not one-to-one. You're giving the IRS 100K. You're not just getting 100K back from property. When it doubles, because the value goes up, now that 100K that would have gone away became 200K.
And then potentially you get around 50 to even like 100% tax, like tax benefit back, just depending on each property. Right?
So it's like, it stacks upon each other. Now that wealth, you sell it. We're gonna go into this more detail, but basically, like, because we obviously we don't have enough time to go into detail. I'm so excited about this, but basically, it keeps stacking. You're gonna get, the number will blow you away.
And imagine, like, you don't do just once, like you do this a couple times a year, and then it all compound. By the end of like 5 years, it's like gonna be like mind-blowing number.
The math for someone who's an active person in multifamily will blow most businesses out of the water compared to the amount of time and effort it takes. And this is like, and here's the thing, this is not like a crypto thing where it's not a tangible asset. This is like actual buildings where people can go to. You see people living in it. You can drive by, you can read Google reviews. You can go and touch and feel this asset. And it's common sense. People need a place to stay. We're just providing affordable housing for them to live in, clean, affordable housing where we take care of our tenants. And that's like the difference between how we do things and maybe some other people you may have heard who's like bad apples in the business. We're not slumlords. There's something that needs to be fixed. We fix it immediately, because our tenants are critical to protecting our asset. This is our huge $77 million property we just closed on June 30th. Do we want people to trash it? No. So we want to make sure that the people who are living in it are treating it as their home. And how do we do that? Is we treat them right. You have a repair, we fix it. You need to replace something, we fix it. That's how we do business.
So it's like a win-win-win situation. And our investor, like passive investor, loves it, because they're the people who love real estate, who wants to do multifamily. They just don't have time or even interest to learn all the nuance and the details in doing it. Yep. They just want to trade their money for their time back, right? They're at that stage in life.
Okay, so would you say because more, I'm just throwing this out there, would you say because more people tend to live in apartments or are not homeowners, is that why there's not a significant decline in the multi-unit apartments?
Absolutely. So basically, first of all, the price to rent a home versus apartment, the home is more expensive to rent than the apartment. And also the other thing is, versus buying a home, that affordability becomes even wider. The median home price, for example, in California, it's like by the end of this year will be around $800,000 to buy a house. It could be a crappy little house, 800,000 with interest rate 6+%. How many people can actually afford that house? They would rather rent. And we talked about this a little bit yesterday on our live. Is like it becomes a lifestyle choice as well. Younger people, millennials, are not like, oh, I'm gonna put my roots down in this neighborhood for 30 years. No, they're gonna be like, no, I want to go around. I want to travel the world. I want to be in different parts of the city. So it's not only just economics, but lifestyle difference that it's evolving as well.
Yeah, on top of that, they, like Pom said, like the one that we just closed, 77 million, is near Walmart headquarters in Arkansas. So a lot of the Walmart employees or even the vendors, they don't want to be there for 30 years. They're probably going to be there for like a couple of years, and they prefer to rent because like our apartment gives them so many amenities that otherwise like owning a single family home wouldn't have, right? On top of that, the high interest rate, affordability, they can't afford it. Like, it's just too expensive now.
Yeah, and right now when you look at the equation, buy, rent is way cheaper.
Yeah, you don't have to deal with like when there's like a pipe like issue or roof issue. Like we come out and we just take care of like all those stuff.
Okay, so let's transition to another thing. I think this is this conversation that I'm gonna go ahead and like oppose right now is more or less like, this is for, I guess, like the people who like to hustle, the entrepreneurs. Like, how does one raise capital, right, for these type of units? Because you guys did, your last deal was it 77
purchase, 38 raise.
So yeah, so you guys raised 35 million, meaning like you got 35 million from other people.
38, yes, close enough.
38 million from other people. Okay, how do you go to somebody and say, hey, we need money for this investment? Like, what's the perspective of it? And like, you guys raised 38 million. How many people of that 38 million, how many people make up that 38 million?
I have to tally, but it's probably a few hundred.
So 100 plus people
probably
decided to.
Yeah, so basically we I know,
no,
right?
No.
But you know what? Trust us. We didn't start with 38 millions. Like our first deal was just $6.9 million purchase price. So we only raised like 3 million-ish to start. And no. But it wasn't just us. It's a team. John's like, I can't.
Okay, it's a team. It's a team. Okay, I got you.
And here's the thing. There's a couple of things. Number one, we're providing them with a really awesome opportunity. I think like when we're starting out, we were scared too. We're like, dude, we don't have any rich people. Like, how do we do this?
We don't have rich friends, rich family members, or like uncles.
But know that there's tons of these rich people out in this country. In every town you live in, I guarantee you can find at least 10, 20, 30 people who have 100K that they're willing to invest and they want to invest in real estate. So number one, mentality, mindset change for everyone listening right now. We're not asking, we don't need your money. We can care less. If you separate the result from the conversation, you're going to be free and they're going to be able to tell you're not desperate. I want to raise 38 million. We want to raise 30, but we don't need to raise 38 from you. If you like, the outcome of this is we had a great conversation. So we have to separate the outcome from the activity. That's the more mentality. I don't need your money.
Okay? I'm just giving you an opportunity. You're actually looking for, like, you actually like want us to help invest in the deal so that you get the return that we just talked about, like the potentially doubling the investment or the tax saving, right?
Like how?
So break that down. Break that down. Like,
yes,
because the mindset on, you know, at least from my perspective and maybe some people's perspective on here is, you go into the mentality, I don't need your money, but we're providing you with an opportunity. What makes the opportunity worthwhile for them to say, okay, they are doing it?
Well, think about it.
I love your questions.
So number one is, a lot of people don't understand the tax benefits that we just talked about, right?
Like, John, if you know, like, and trust someone and you love like multifamily and you want to get started, like, and if you have like money on the side and you want that tax benefit, wouldn't you want to like try it if you actually understand the numbers and how it works?
So the two parts, right? Like, they're growing their long-term wealth without putting more than like 3 hours. Like literally, as a passive investor, we've done the math. They put 3 hours. Okay, here's the math for them.
Or even more, right?
Here's the math for them. Let's say it's 5, whatever. They put in $100,000. In 5 years, theoretically, they make back another 100,000. So from 100K became 200. They spent 5 hours on it.
And then on top of that, they get tax benefit of, let's say, 50,
don't even talk about the math. It gets confusing. Let's say they make 200K back, right? That's 2x their return. And they spent 5 hours on it. That means that for every 100K they made, that was like a $50,000, $20,000 per hour.
And like they're
getting paid $20,000 per hour to do this. And we have enough people, we don't need their money. They're asking to join our deal because our deals fill up very quickly because it performs. So like those are like kind of like when you reposition yourself, like if you think about it, if someone's in the pool, you're standing with a lifesaver, handing them something because they're hustling, they're grinding, they're doctors who are working super hard.
Or like the inflation is eating away their wealth. Like they're just putting the money in the bank.
They don't know where to put their money. People are always looking for a safe place to put their money and they don't know where that place is. And you're coming along, John, you're saying, look, I have that answer for you. I have this safe asset that has been around.
You can even drive to the property.
You can go verify that this property is in a great area. You can do all your due diligence. It's like factual. It's not based on, oh, I'm going to randomly create value on this crypto coin. And then like, you're going to buy it. And then therefore it'll keep pushing it up. And it's like, that's just Ponzi, right? It doesn't make sense. So that's why, because people are, no, you and the audience here are a small minority of people who actually know about this. And there's way more people.
And we were like that too.
Yeah.
Wow. Okay. So you guys took the leap of faith and just say, hey, we're going to go ahead and raise this money. How many no's? Because we talk about the law of averages, right? Right. LOAs, right? How many no's did it take to get to a yes? Or did you guys get any no's? Or just everyone just loves y'all?
You know,
and they just said, here, take my money. Like, what does it look like?
38 million is way easier to raise than the $3.8 million that we started off with. Because like after a while, when you learn how to create a system and when you have like, you know, like you implement them one by one, it's like the money just comes.
And
right?
And we don't get no's because we don't ask for yes or no's. But there's a system involved, and it's really a little bit too detailed to go right now. But
like you guys have a pitch deck. You guys have a pitch deck. You guys have have everything in order.
We build the relationship way ahead of time. We already have the handshake. We've spoken to these people, and then when the time comes, like you said, we present the opportunity, and the people who say yes will say yes. The people who don't. And we never chase the people who don't say yes. We don't pressure them. This is not a sell pitch. That's what we say. You invest when you want to invest. Sometimes it takes a while. We have people who were on our list for 3 years. There was literally called on the dead list. We're scrubbing them out, and they resurrected themselves. And they're like, I'm here for 200K. I'm like, whoa, I did not. Like their name was tagged dead. because we were trying to scrub the list at the time. It wasn't trying to be like rude to them. We were just trying to scrub our list. But we were surprised they came back. So to not care, it's not a yes or no. The people who want, they'll come and we just talk to them and like, okay, complete that information. Wire us the money. We confirm the receipt and that we go from there. And beauty is build the pool of people ahead of time, and you will only get you will get enough yeses for your investments easily.
And of course, like when we were in flipping, we used to raise money for a single family flip as well. And we found that it's way harder to raise for single family than commercial. Even though like when we do single family flip, they actually have more control. Their name is actually on the title,
and it's debt, right?
Debt and deed, right? But then people want to really want to get into multifamily more, but they just didn't know how, and they didn't have the $38 million, so they just want to like, hey, be a little part of this thing that is like producing so much potentially profit, right?
Literally, just got the regional manager for the $77 million property. He sends us an email every Monday, right? So we just started. This is our first Monday with him.
So a lot of communication during the deal, updating your investors, et cetera, et cetera.
Correct. Good, bad, everything. Always tell them, like, when there's something that, like, there's no way that there's going to be no speed bumps. Realistically, it's a business, stuff happens. how do we fix it? How do we make sure it doesn't happen again? So you are always like transparent and always proactive. In Wall Street, they have this thing called black swan events, like unknown. We try to mitigate as much unknown as possible, but like when something like COVID happens, like then you pivot, then you figure out what's next. And if you have experience in the business, you have a good team around you, you can adjust. And that's how we've been doing since we started in multifamily.
Got you. Okay. Say one doesn't have, you know, they don't really have the funds to get into, you know, something like this. What's the next best thing, or what is the build up around it so that they can get themselves to be, I guess, an investor, you know, into this space? Because I know you guys talked about, and I hope you guys can break this down, like the accredited investor versus the sophisticated investor. So like, can you break that down also, and then also break down how does one get into this space, you know, when they don't really have funds like that, but they want to build up to?
Are you talking about being passive investors or active investors?
We can go into both. Okay. So on the if you want to be an investor, typically people have passive investors. So there's two sides of investing in multifamily. Active investor, who are people running the deal, sourcing the deal. And then the other side are passive investors, who we raised the $38 million from. If you want to be a passive investor, you need to build up a nest egg. Typically, the minimum most people accept is $50,000. Yes, it sounds like a lot of money, and it is. But eventually, you can, if you do it correctly, you should be able to save enough nest egg for that. Make sure that don't borrow mortgage or something like that. Some people recommend that. For us, we feel like, hey, you need to be able to get to a point where this money can be something that, if worst case you lose it, you don't lose your house.
And then a lot of time, like, people actually don't know that they have that money, but they actually do. They can get it from their like retirement account, and then you know, instead of putting the money in the retirement account, they just,
or life insurance, all this stuff.
Yeah.
So to invest in multifamily, there's two type of groups that we allow for our specific segment of SEC, is Security Exchange Commission. They regulate the art industry, so it's very highly regulated. So they require 506B, which is Regulation D 506B. You can go look it up. It allows us to raise money from people we have pre-existing relationship with. For example, if we were on this call and I was like, King Josh, I have a deal. Boom, we can't raise money from him. That'll be illegal, and you can go to jail for that. It's very serious. So you have to establish a pre-existing relationship. I may say, hey, King Josh may be like, hey, Palmy Nan, I wanna get into this. Like, okay, he DM us. I would say, hey, let's hop on a call. Let's talk about this first to see if we're a good fit. And then from there, we can establish our now we have
we have to have a couple touch point, like at least 2 or 3, right? Before we can actually take money from, you know, people.
Even solicit.
And on top of that, like for us, like we want to make sure that passive investor and us goal is in alignment, and that they understand what they're investing in. So we won't just take money from just anybody, right?
Yeah. And so for us, 506B, we can take as many accredited investors as we want. Accredited investors are people who make 100K in income, 200K in income for the past 2 years, single, or if they're married, 300K. And this is can they self-verify that this is them, or they have a net worth of $1 million, excluding their primary home, or $2 million if they're married, net worth wise. So that's accredited. You can take as many as you want. Sophisticated are people who don't have that status of income or net worth, but they have already done real estate, have been educated about real estate, potentially understand the risk of what's involved. We get to take 35 of them. Now on our deal, 38 million, we only have like 28 sophisticated investors.
The rest are accredited.
90+% are always, because dollar amount wise, you have to.
It makes sense.
And honestly, John, we don't even advertise, like, meaning that like nobody in the world really know the Kitti sisters, because we start recently to be on live. So trust us that you don't have to have like a big list or anybody like that to be able to raise that kind of money.
And you start off with, I know it sounds big, but you start off with 2 million. Right? 2 million, 100K is 20 people.
And it's a team effort, right? So it's like, so even like if you go, right? And let's say if you have 14 player, right? 2 million. So each of you guys do 500K. Go find 100K, 5
5 people.
Yeah, people.
Which is not hard. How do you do this? You go to real estate events. Don't go to stock or crypto or precious metal event and try to convince people to get into real estate. Go to the real estate event space where they love real estate. They're like, no brainer. Now John's coming with an opportunity and connect with you. I'm in this market. I'm in Miami, right?
John is in Miami.
Yeah, so I'm in Miami. This is a hot market, blah, blah, blah. Build that rapport. Someone's gonna want to invest with you because they like you versus they like us. It's just that it is facts, right? Some people would invest with someone that sounds more Wall Street. Some people be like, no, I like us. So there's a group of people who want to invest with you. Just find them.
It's like you just need to look for that opportunity yourself, and and just get educated, and then just go.
And as you're getting started, if you don't have the funds to begin with, already start building that investor list. You speak to people that I'm a real estate investor. I'm an apartment investor specifically, and just say like, listen to the podcast, listen to YouTube, get educated, and when you're ready, come and join a challenge like ours where you'll get even more info. And so you can get started. When you're an active investor, there's many different buckets. Yes, you need some money, but you don't need as much money as a passive investor potentially can invest, because you may be the one who brings in the deal. You may be the one who's like, I'm going to be boots on the ground, who's going to not work on the property, but like visit the property, make sure it's running smoothly. And then someone else may be like, yeah, I'll help contribute most of the fundraising. You'll help too, but someone else will help. And then someone else may be, I'll bring in a net worth and liquidity because I don't want to deal with that. Or someone say, I used to be a broker, or I have relationships with brokers. So there's different team players, and not every single one need to have the same dollar amount.
Mm-hmm.
So don't think like you can't start with $0, but if you have some, you can start.
Got you. Okay, halftime real quick. Guys, link in my bio for the challenge. The challenge starts in less than 30 minutes.
No.
All right,
2 hours and 30 minutes.
Oh,
3
2 hours
p.m.
and 30
Eastern.
minutes. 3
You're
p.m.
coming early.
Eastern. Sorry.
We
Sorry,
won't
I'm
be
coming
there yet.
early, right. 3 p.m. EST, right? The challenge starts, right? Link in my bio. I am a VIP. They do have general admission for those who still want to get the information and still get access to them. But VIP is just a little bit more proximity. You get a little bit more perks, and you also get the recordings for the whole entire week. So for me, I said, you know what? They're doing it at a big scale. They're doing it at a big level. Let me go ahead and just learn from what they're going to go ahead and teach, so that I can go ahead and apply that thing. So, I'm grateful that you guys are even, on the call, just spitting game, just giving people, just really just giving people hope. Because I feel like this information gives people hope. There's so many people, or at least for myself, I've always wanted to learn about real estate. Obviously, I got into it from an STR perspective and from a property management perspective, but I've always wanted to get into it from a multifamily. And the first time I ever heard about it was like, I heard like Grant Cardone, because he runs like thousands of ads. So like you see it, you see it all over the place. So to come across some people like you, who I see, number one, you guys are women, you guys are dominating in the space, you guys are teaching the game. And, I feel the genuineness. You know what I mean? I think that's the most important thing. You guys are coming from a perspective of being genuine, being transparent, letting you know the good, letting you know the not so good, letting you know how to make the not so good good. So, I just really, truly appreciate that, just because there's a lot of people who are seeking for the information. And I feel like continue to keep doing what you guys doing. I can't wait to invest in with you guys at some point and be a testimonial and I really just want to tell more people about you guys. Like, I want to be a advocate for what you guys do, because I'm like, man, I get breakthroughs just from listening to the conversation with you guys, or even when you guys on your stories or even on your page, when you just go ahead and you put things together. And I'm just like, man, like, you guys are just mind, like, you guys put me, I was thinking here, but you guys are thinking here, and it's just so much different. It's just a different perspective. But I also, because I know we don't got too much time, I know we got about like 10 minutes maybe. So yeah, I also wanted to ask you guys, for the people out there who may be kind of skeptical, right? what is the risk, in doing something like this? Because there's some people who's like, it's too good to be true. The real estate market is not doing well. All these other, and you guys are experts. You guys been doing this for at least a
We've
decade,
done
right?
real multifamily for 5 years, but single family for 10. Yeah.
Wow. Okay. Yeah. Great. Yeah. Let us know. Like, talk to the people who may have, they may not understand the perspective of what's going on. They may think, I think it's too good to be true. And then, the state of the real estate market, because a lot of people say, the real estate market interest rates are high, this is that. Like, if you could kind of just break that down.
This is awesome. Okay. Oh my gosh, I'm so happy you asked that. Okay, first thing is media. They love clicks. They love views, right? So they want to give stroke everything. So they've been talking about, the commercial real estate space is crashing. Well, what they're really specifically talking about, if you watch their content, is talking mostly about offices. Because under commercial, there's many sectors. Yeah. So there's commercial would be office, warehouse, retail, hospitality, residential, which is us, right? So some of them have not recovered from COVID, especially office. Office is really, really hard hit. Mm-hmm. Some hotels that cater to certain business, that's not like a leisure place, also got hit and still haven't recovered because people are doing less business travels. In general,
because during COVID, they were ordered to stay at home, not come to office. So they were working from home, right?
So basically, generally, people right now, and even in commercial that you're hearing about, like default on loans is rising, but it's not like we have trillions of dollars in loans, right, out there. So the amount that's defaulting is not massive. Generally speaking, the people who are in trouble are people who got into multifamily purchases with short-term loans that are variable, that didn't buy a rate cap. What rate cap means is it's insurance on the ceiling for your interest rate. If you buy short-term debt, like for us, we bought short-term debt, but we have a interest rate cap. Like basically, like right now, interest rate's up here. Our cap is down here. So interest rate can't hit above this, so we're protected.
But there's some
people who didn't buy this. So now the rates are up here, and now mortgage is like double what they used to pay, so they're screwed.
And on top of that, right, where real estate matters, right? Not our markets are equal, right? When you talk about, like, if you hear the news, they talk a lot about New York, San Francisco, right? They don't talk about this.
They don't talk about Texas. They're not talking about Florida. They're not talking about Georgia.
The market that we love, right? Like, so
the demise of real estate. Okay, go do this as a thought exercise. Okay, type in like bleak real estate headlines from the 20s, bleak headline from the 30s, 40s, 50s. You're gonna see people say the market's crashing. We're at the top of the market. But guess what? Since the 70s, real estate prices, home prices, I'll just say home because the statistic is easy. Real estate single family home in the 70s, median price was like $30,000-$40,000. If the demise of real estate is true, we've been through the Gulf War, the first Gulf War in the 90s. We went through a dot-com bubble. We went through a Great Recession. We went through the pandemic. All these things, yet the value in the long term continues to increase.
And on top of that, like multifamily, we look at micro economy, right? Like we're not looking at macro. Mm-hmm. So like your sub market matters, right?
That's why like the property that we bought in the $77 million property, we're looking, who are the residents living here? The median income within 1 mile is $180,000. So this is affluent people. They're moving into Arkansas, not because they're like, oh, I love Arkansas, but because their employer, Walmart, and its vendors. Now, who are these vendors? Coca-Cola, Clorox, all the major brands. They have a mandatory requirement by Walmart to have an office within the proximity. So now all of these vendors have people there. So therefore,
and on top of that, they're opening medical school there.
They're expanding the medical center. It's a great area to live.
More construction, more jobs. I mean, people need a place to live.
Why. And overall, residential is one of the fundamental needs. We need a roof overhead. We need water, we need food, and we need a roof overhead. So you can get away with not working in an office. You can get away with not traveling as much. But you can't
going to retail to shop because there's Amazon.
Or eat out, but you can't get away with not having a roof over your head. And as people are moving from the north, you probably see it in Florida a lot. Like a lot of the East Coast, like Connecticut, New York, Massachusetts, they're moving south. We are also seeing people moving from the West Coast inwards as well. Net migration to an area speaks to the growth of that economic base. And it's like Nan said, don't look at macro. Don't look at the whole United States. It's a 300 million plus people. Look into the sub-market. Look into the area where you're going to invest. How they're doing, because it's not going to be even.
And the last, because I know you guys got to go in what? We got 2 minutes left.
Okay.
Yeah. 2 minutes, right? Yeah. So what are the members of, like, how did you guys, what's your roster look like in terms of like your team? Like what type of team do you need to put together? If you could list that out for people here on the call, because obviously there's a bunch of components that you need to go ahead and, execute the deal. Like, who are the people on your team that you need to go be successful?
On the active side, it's not necessarily how many people, but different roles. So there's like sourcing the deal,
lawyers.
No. So like in the active team first, sourcing the deal, someone who sourced the deal, like let's say Nan sources the deal. I raise money. I do other stuff as well, but I also raise money. Someone who manages the asset, someone who has relationships with the broker, something like that, right? So there's different roles.
And then on top of that, you need like another team player who are like accountant, real estate, lawyers,
construction people, bookkeepers,
maintenance, and all this stuff.
Property management company. So you have
how can I forget property management?
You have a core team, and then you have team of vendors or relationships that you like, contracts that you pay out. So, but those are all relationships that are like very easy to find. And so don't worry, don't feel stressed. Like, man, I don't know any of these people. Like, it's very easy to put together because this is common stuff that everyone will have to use. So don't feel overwhelmed.
Yes, and for us, like the manager, like the property management team is like one of the key players, right? Because they're the people who do like run everyday operation, like on site and reporting to us. Like us as active investors, we are not as hands-on, we just manage them. And that's the beauty of like having this lifestyle kind of apartment where we, two girls, live in California. We have other people actually leverage and do all like, have all their expertise, and while we're just, loving our life, coming on live and, do challenges and stuff like that, right? Because there are people who are better doing at what they're doing than us. Like, we don't know how to run property management, like their building, like they know way better. They have more experience.
How to deal with, how to file evictions, how to raise rents, what to raise rent for, how to pay bills, how to we're gonna have
you guys know that kind of stuff,
like
right?
We're gonna have an inspection happening in a couple weeks, like how to deal with inspection.
I knew there was somebody when I was living in an apartment growing up. I knew there was somebody like you that was making a lot of money. I just didn't know how to get to y'all. I just didn't know.
We were living in apartments too, growing up, and we didn't know. Like, back in the day,
somebody's doing what you guys are doing in the apartments that we were living in growing up.
Exactly. Now and what you said at the beginning, just to wrap things up, is like, if you're in the picture, you can't see the frame. So we didn't know. And so like when we together, you and I and Nan, it's like we all are helping spread the word. And that's why we feel like multifamily and even just the mindset is of abundance. There's plenty to go around. We're looking to buy a few apartments per year. There's hundreds of thousands of apartments in the whole country. Like, there's way more than enough. We want people to understand that in order for them to have a more fulfilled life, to have more impact to their community, to have more impact to their family,
they have financial and time freedom.
They have to separate the income generation from time. That if you continue to use that old hustle and grind, do more, you're only going to have diminishing return, and you'll never be able to fulfill the given purpose that you're brought on this world to do. You have a mission, and you're not going to be able to do that if you're stuck behind a computer sending emails for someone else building their wealth, building their dreams.
Wow. First and foremost, I just want to thank you guys. I'm gonna put this right here and pin this. So people can look at that. But link in my bio for the 5-day challenge with the Kitti sisters. It starts in
2 hours and 12 minutes.
2 hours and 12 minutes. Guys, I'm locked in. Like, I'm going to be a product of the product. I can't wait to get on the calls with you guys. I can't wait to learn from you guys. I am a VIP. You guys can get general admission if you want to, but I recommend go get VIP, just because you can get a lot
And you
more
get to ask
proximity to them.
questions. You get an hour.
You get
You
to
can ask questions. Yeah.
you get to ask questions, and you
Yeah.
get the replays too.
Yes.
Correct?
Correct.
So you get all the replays, because we might not be able to retain all this
You can
information,
watch
but we're going to take notes and we can look over our notes. But it'd be good to go ahead and get access to the videos that you
Right.
guys went over this whole entire week.
Yeah.
So I appreciate you guys. Super thankful for you guys. I can't wait to go ahead and get on the challenge, guys. Click the link in my bio. I'm going to be promoting it as well, pretty much for the next 2 hours, so people can go ahead and get access to it and get that understanding. And I think there's this thing called the IG, called the information gap. So you guys can fill up these people's information gap, so we can go ahead and have more people know about this, because you guys are going to be creating the next wave of multi-millionaires.
Easily.
Literally.
I mean, I'm not.
Easily.
It's when okay. I'll just.
You have to
guys.
I'll
have
tease
to
you
join
guys,
day one,
because
I'll tease you guys that
this.
once whenever we go over the math of how the money works, you're gonna be like, what? How did I not know about this first? That's the tease we're gonna give you.
Quickly before we leave, can you let them know what the 5 days, what each day is going to go over? Before we leave? You guys got to come and see. Link in my bio. Let's go.
If you like our conversation so far, I think you're gonna find the next 5 days to be even more informative. And so,
because we're gonna dive deeper, break down the numbers, and share crazy stuff.
And like I said, like I would love for as many people to join, because I feel like it'll be valuable to them. But we're disconnected from that. So join because it makes sense for you. And if it doesn't, that's awesome too. It's okay. It's okay. So if you want to hear more, well, we'd love to have you. And if not, like, congrats on seeking out the way that your own path to financial freedom. Like, I think like there's no one path. So if this makes sense, do it. If it doesn't, it's okay.
Okay, cool. So I want to incentivize 2 people, right? Whoever goes ahead and get whatever ticket you get, right? I'm going to go ahead and send, 2 people $50. Just screenshot me, that you bought the ticket, and I will go ahead and I will send you $50 on whatever payment you like, whether it's Cash App, Zelle, Apple Pay, just to go ahead and incentivize, because I understand that, I want to incentivize people who take action, So other than that, I love you guys. I appreciate you guys. You guys have an amazing day. I'll see you on the call at 3 p.m. EST, and
bye.